presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning, your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in and keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about taking action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 344, NASDAQ up 278, S&P's up 66. Gold contract trading down $6.80 at $19.24 an ounce. We have silver down 6 cents, $21.82 an ounce. Light sweet crude up 66 cents, $68.27 a barrel. Notes and bonds. The 10-year note down 27 ticks, trading 114.09. The 30-year down 31 ticks at 130.23. And King dollar right now trading down 245, 104.400. The euro is at 106. The yen is at 133, and the British pound is at 121 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We're going to bring the futures up first because we just had another spike high, and let's see if we get any volume behind it. Because we have divergence out here in between the S&P and the NASDAQ. The NASDAQ 100 is much stronger than the S&P in a big way. So I see what that's doing. Okay, the S&P is just going up to try, the futures are just going up to try to test the highs of today. If we go into the SPY, we take a look at the SPY, what you're going to see, you get price movement big time, a huge contraction of volume also. Yesterday, what we had out here, you get volume. Don't stick on me now. We've had a little problems. They're doing a lot of work somewhere on these streets outside, folks. That's why, and they got us down yesterday and today, but we're back up. Okay, so what do you have? Yesterday we did 172 million shares, and today you're at 100 million. That being said, if we go over to the Qs, what you're going to see in the Qs want to go reach for the high of a couple weeks ago. The Qs out here, it's a full trend all the way up, not backing down. You're up $7.50. You get 74 million shares traded already. You're taking out the swing point. The swing point had 56 million. That's how easy to take out. And you can see at the top of this basically setup, what you have is that you have a high volume high at 313. The low of that is 306.79. We did volume of 83 million there. And, bottom line, what has also happened here is that the Qs have got back inside the higher range again, because that's when we had broken topside. So we'll see how it's going to handle it tomorrow. I expect we're going to be up there tomorrow. We're going to take a look at the gold contract. Gold contract had a sideways move out here today. Last couple of days, you've had a lot of contract volume. You've got higher today out here building cause. You've done 237,000 contracts. The gold contract's going to have to build cause because of the fact of how we actually came down. So if we take a look at this, you're going to see what's basically stopping. What's stopping this is that the way that we had come down at the end of January. We went to 1932 to 1874. We hit the 1938 today, Yesterday you pushed with volume, so today you went sideways. That's building cause. So this is building cause to basically get up to those highs. The note and bond market. So the note and bond market, the 10-year has given up everything that it had going for it yesterday. That it says that we will back down, but something that you want to really wrap your head around here is this. And this is what's really cool. So the last two moves in the 10-year, we started out at 116.28. We got down to the 110.12 area. Well, you're almost back to that area, so let's say it's going to back down again. You back down with lighter volume, it's going to be a buy. That's the real bottom line. That's if and we even get that far. And if we go into the continuous contract and look at the continuous contract, you're going to see the setup is pretty cool, man. We'll see if this thing's going to hold, but you're going to see we actually came right back to, waiting for this to come up right now. Oh, look, I keep forgetting you got to go back more than 15 years. This is wild, man. When you have to go back more than 15 years in the bond market, folks, it's something else. But you'll see what I'm talking about here. You've come into this swing, and the swing. This swing is the swing's back to 2007. That swing there was 111.22, and open this a little up, and we had the last low that was established for us was about 5 months ago. That was 108.26. Now, he came back down. He didn't break it. So that says, bottom line, at these lower levels, more than likely what you're going to have, you pull back with lighter volume. The rate structures are going to be basically, waffling between on the 10-year right now at 3.5. We hit 4. This is the second time we've hit 4. We're probably going to be going between the 4 on the 10-year, 3.3 on the 10-year, something like this. We'll see whether we're actually going to break those levels. But we're going to have the next Fed meeting is the 22nd, I believe. And I expect, you're at 4.5 to 4.7. I expect you're still going to see a quarter point. Lagarde out here this morning, they went up a half a point. Bottom line, there's a differential, there's no doubt, between the banks going south and the aspect of where inflation is. What's going to get intriguing is this First Republic deal. So the First Republic deal, what they're floating out here right now is that they're going to basically, the nation's biggest banks are going to be, the government's trying to get them to agree to deposit, $30 billion. And the banks they're talking about to deposit are J.P. Morgan, Citi, Bank of America, Wells Fargo, Morgan Stanley, U.S. Bankrupt, Trust Financial, PNC. We'll see how that baby goes, because the bottom line is that when we get back, I'll walk you through how this would basically work. But the bank itself is basically bankrupt, folks, okay? And one of the main reasons that these other banks would come in is because First Republic pushes out so much paper. You can see First Republic today, it got down to $19.80 again. Well, if we look at Monday, it was at 17. Tuesday, you're at 50. Today, at 19. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 324. Nasdaq's up 280. S&Ps are up 64. And let's do this 1 second. FRW, because when you see this is wild, folks. Okay, you know, no matter how long, first you're in this market, there's always new things to learn, and this one is a beauty, man. Wait till you hear this one. This one's sick. So I get another article on my phone. I gotta just look at this, folks, so you can see, so I can find this for you. Let's do it this way first. Okay, so first let me go. This is about First Republic. Now, what First Republic did, and this is where this gets really wild, and this is where there's no doubt that, you know, now there's nothing illegal about what the insiders actually did, but that being said, there's going to be flack beyond belief. So watch this. This is a rule that I never knew was applicable, and I'm sure that most people didn't know was applicable. There it is. Okay, here, we're going to go through these so you can see these. Wait till you see this, man. This is sick. Okay, so, you know, most times, folks, not most times, all the time, when I actually bring up, you know, the equities, and I bring up there's a symbol, PHDC, that I can put on the Bloomberg, and it'll get me, you know, who's buying, who's selling. But now it's still delayed, except that it's not delayed for insiders, right? Well, you see this right here? That this is the CEO. You see this 8,100 shares? Look at the date, February 28th. Okay, sold 8,100. Now let's go back again. I'm going to show you this. Okay, so that's the. Now let's see what the. Let's see what the. Okay, this is. Okay, no, that he didn't do anything. Executive. Let's see what. The credit chief. See what he did. Okay, look at this, man. This is sick. Now this is the risk officer, folks. Okay, see this right here? 8,000 shares. March 6th, he sold. Okay, so, okay, let's remember these prices because I'll go over this. Okay, so March 6th, you get 8,000, right? March 6th, that's 8,000. The other one was February 28th or something. February 28th. Okay, so we bring this back again. Because when you hear this, it's going to blow your mind, man. Okay, so that was the chief credit officer. Let's see, he's the chief banking officer. Let's see what he did. He didn't do anything. Okay, so we have 2 so far out of 4. Let's do the CFO. Yeah, he didn't do anything either. Okay. Of COO. She doesn't own any stock at all. Okay, I could keep going. Thank you, Duffy. So the stock was at $121, right? Well, wait to hear this, folks. This is amazing. So First Republic, right? They don't have to file with the SEC because there's a rule that goes back to the Depression that they can file with the FDIC, and no one pays attention to it. And it actually is listed on the FDIC page. So you talk about a heads up. I mean, it's unbelievable. And on top of that, they don't, I don't know how they, I didn't go through the whole rule, structure. But on top of that, the bottom line, they're under a different rule. That's the bottom line, that they can actually do that. You know what I'm saying? And what does happen is that if you knew about that, and now, of course, we all know about that, and you can check the FDIC site, and it's right there. It is right there. But it's a mind blower, man. People are going to be going out of their mind because I believe the number is something like about 40 or 50, maybe 30. I don't have the exact number. That's the bottom line. But you're talking about big numbers. Yeah, if we bring this up, and you get to see, just so you can see that we had the 28th, and then the 6th. The 6th is a trip. The 6th, I mean, he just got out with the skin on, right? That's still, that's the 7th. Oh, that's the 7th. So the 6th, yeah, the 6th, the stock was at 123. In February, around the same, 127. 8,000 shares. That's a lot better, $127 than the low of 17, right? Where we are here at 35. So the way that they're going to try to basically get this recapitalized, because right now First Republic's still bankrupt. If you basically looking just at the numbers, they're bankrupt. And so there was a question, should we buy it? I wouldn't be buying it. The reason I wouldn't be buying it is that the amount of bonds that they're holding versus what the bonds are worth, I mean, are insane. I'd bring the rest of the deal up, but it wouldn't take too long. But the reality is that same type of setup, meaning that they bought bonds, put them on their balance sheet, bonds go south, their bad trades are worth more, or lost more than the whole equity in the company. So this is going to be an intriguing one as to the aspect of the other banks coming in, putting money into the banks, and no, it's a First Republic, and ought to just keep it going, and then they got to figure out, how are they going to basically get into a positive. It's definitely a unique way of stopping a run. There's no doubt about that. And what you do have is that one of the main reasons that these bigger banks are doing this is because of the fact that they do so much business with First Republic, because First Republic basically pushes out so much paper that all these other bigger banks are also broker-dealers, and that is big dollars in a monster way. So some of the higher volume equities out here, let's see what we got out here today. But that's what a twist that is, right? They don't go to the SEC, and they can go to the FDIC. Yeah, pretty crazy. So let's take a look at it. You got First Republic is up $3.50. Tesla's up 4.5. You got Advanced Micro up 6.5. We have Amazon up 4. You got Apple up 3. You got Nvidia up 11.5. You have Google up 5.5%. Microsoft's up 10.5%. They're piling into the techs, man. That's the bottom line. You know, let's go to Microsoft, MSFT. There's no doubt that money is piling into them. MSFT, MS. Look at that move. Big move. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Stay right there, folks. Come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So here's the numbers. They actually, the couple of the insiders, they sold 12 million in equity. Not still 12 million. But here's the numbers. Check this out. This is amazing. So right now, as of this morning, First Republic was $10 billion in the hole. Now, that is in the hole just of that trade, okay? They basically get a negative $26.9 billion on the trade, and their equity is $17.4 billion. So, you know, I suspect, you know, that the other banks are going to come in, and if it would make sense, you know, they're going to come in and save it. But the bottom line, you can see how this thing is shaken out. That's a new way of doing it. There's no doubt. And there'll be a lot of different ways. It's like when I brought up yesterday, folks, is the bottom line is that, you know, on each one of these, whether it's a credit event, whether it's a debit event, debt event, you know, you get a few of them. Oh, and by the way, do you know that? Okay, so First Republic is the only equity that actually can do that to the FDIC. But a couple days ago, there were 2 of them. And you know what the other one was? Signature Bank. How's that, right? Imagine those cats sitting there thinking, like, hey, this is so cool. Now, what happens, this is the mind blower, and this is what we all have to get out of it. And I'm not sure about the Signature Bank, but I suspect it's the same way. If you do go to the website of First Republic, okay, it's there. It's there that they're selling. It's also the FDIC. So it's there. The question is just where do you find it? Versus, we're all used to just, looking what's filed with the SEC, So there's always something, There's always something. So to get back to my point of the aspect of where we are, and this is where you actually get down to why $1 today is not worth what $1 was, 10 years ago, 20 years ago, 30 years ago, right? So when you have these events, there always is going to be a reduction in rates and a pushing of money. Because if there's not, it's over. So, that's how it goes. And, if you think it's going to be over at some point, well, there's nothing that is going to, let's put it this way. If you think you're going to try to invest in anything and you think it's going to be over, the only thing you're going to need is an M16 or an M60, okay? That's the reality. And that's not going to happen, okay? Because every asset would go down. That's the take on it. And that's why what does happen, and this is where this goes with inflation, is that, yes, there'll be social unrest when, the food prices just keep going up and up and up and people can't afford the food. Then they got to figure that part out. But, well, you get the gist of it. And that's why numbers are always going to be higher. And in the context of those numbers, it's going to buy you less. Now, that's what you have there, and then you can get into the aspect of, whether it's candy bars, whether it's cereal, whether it's butter, everything keeps getting smaller and smaller and smaller. And one of the biggest ones that, if you're into wood, is the aspect that, if you go back in time, when things were solid wood, then you start with the veneers. Now the bottom line is that what you end up doing is that you take a piece of wood and you slice it like 100 times, right? And that's the veneer. So I suspect as you keep going forward, that slicing and dicing, that's where the whole world is, too. This is not just a U.S. deal. We happen to be the strongest in a world that continually goes that route, And what does happen is that you just never know who are the companies that end up, basically with huge bad trades, and they're out of business. Now, the deal, when we started out this morning, Yellen came out, and, her statement was really intriguing inside of the aspect of all depositors don't have to worry about their money. Well, we know that under the law, it's only depositors that have $250,000 or less. And I suspect that she was out there trying to calm things down, saying all depositors. But, like I said a little bit earlier, don't trust that one. I wouldn't trust that one, not even close. You know what I mean? You can split up accounts, unless you're some monster business that, you can't. So let's go take a look at, okay, so, hey, oil. So oil is just getting smoked, man. What you have out here, tested the lows of yesterday. You get down to 65.71. You're at 68 right now. If you go to the XLE, you're going to see basically how quick that gave it up. You talk about a quick give up, man. This is about as intense as you can get. It's still in the consolidation, but it hasn't hit the bottom of the consolidation yet. The bottom of the consolidation out here, the XLE, is down there at the 65. We hit 75 today. And what you're going to see at the end of the week, you can see the expansion of volume already. You're going south right now on a weekly basis. You get 168 million million shares. So, I suspect what it looks like, what the market looks like right now, there's a big rotation going right back into tech because the market is figuring that, hey, guess what? You're only going to have a quarter. They're only going to be able to do it so long because what the next deal is going to be is that there's going to be plenty of folks that are scrutinizing, and they have been scrutinizing these balance sheets because these aren't going to be the only banks of folks that basically have bad trades. And that's what it comes down to. You know, these are just out and out bad trades, man. I mean, that's reality. And, you know, we've seen it over and over again that they will go in just for an extra 1%, you know, and, you know, and Silicon Valley's case, the trade started with a 1.2% or something like that, which is totally insane. Let's go take a look at the GDX inside the gold market and see what we have here. So if we take a look at the gold, that's good. That's a good little setup. Okay, so you pull back to 28.50. You rejected lower price. You have light volume there. You're pulling back into a high volume bar. You know, that's basically setting up for another leg higher. That's how that baby is set up right now. So we'll see how that basically, and you can see the real resistance inside the GDX is at this $30 level. And you can, where that is that's where we came off the highs on the way down. So we'll see if it can get punched through that area. But that's where you're going to basically get some real flack. Let's go to Frank in Gloucester. Hey, Frank, what's going on, brother?
Hey, how are you, Tommy?
I'm doing great, man. Yourself?
First day it feels like spring up here.
I love it. Getting ready for St. Patrick's Day. I like it.
Oh, yeah, that too. That's for sure. Hey, a question before we get into Doug. I still hold 200 shares short of Silicon Valley Bank, and Fidelity can't really tell me what's going on with that. Can you hazard a guess as to what might happen?
Yep. Oh, you're going to be in good shape. I like it. Yeah. Okay. So what ends up happening, right? Now that's going to take a while, but what will end up happening? Well, in your account, they, you know, I don't. What are they valuing in your account on the last trade? Is that what they did, Frank?
Yeah. Whatever I sold the short as.
Okay.
It in there.
It'll end up being valued at a penny or something. But just stay right there. We'll go over it. We have the Dow Industrials right now down. The Dow Industrials up 339. Nasdaq up 276. S&P's up 64. Come back with our man Frank from Gloucester.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now trading up 370, Nasdaq's up to 283, S&Ps are up 68. We're talking to our man Frank from Velosta. So on the shares, Frank, it'll probably take 2 or 3 months to basically get it straightened out, unless what ends up happening is that you may basically get someone that just comes in and buys the name, buys all of this for $1 or something. You know, that's what happened in London. And what happened in London, they bought the shares for $1. You know, so you got some time to wait, but the bottom line is you get a big score, so it's a beautiful thing, man.
All right, I'll wait. Meanwhile, I'm tired of banks. Let's take a look at Doug.
Yeah, Doug. So this is, I haven't traded this one for a while. I should be trading it right now. You got some bread on this thing, that's for sure. So what Doug is, folks, okay, this is the exchange-traded fund that trades twice the inverse of the Dow Jones Oil and Gas Index, okay? So inside of this, bottom line is that, there it is, okay, so you've gone as the XLE, and you know, has gone down. This has gone from $12 to 15. Okay, so let's take a look here. So, you know, what happens with these, Frank? I traded these a lot, and what happens is that you know, like today, you can see that as these get to higher numbers, right, it's dicey holding them overnight. You can see that in 3 days, you know, this baby just took off from, you know, 1317 up to the 1645. So it's like, okay, you know, you went to a higher high. This can back down a bit before it goes up again, but I think you get real action here on the upside. But right now, I'd be careful.
Okay, what's an ETF I should look at that's 1-for-1?
That's what I'm trying to do right now, because it's Doug and Dig. The other one was Dig. I used to trade these.
Yeah, but that's a double too.
Yeah, it is. No, it is. No, I know that. No, it's the same thing. It's ultra oil and gas. I just got to make sure the Dow Jones Oil and Gas Index. That's the question. Dow Jones. Let's see, oil and gas index. Dow Jones oil. Let's try this one. Okay, let's see. Because the question there was fabulous, folks, because the question is that what exactly is inside it? Because what does happen is that with many of these, you know, you're really questioning the aspect of, okay, what is in it? You know, Frank, I don't have it at the top of my head, and before.
Right, but you're looking at the holdings for Doug. And
yeah, no, that's what you want. That's what you want to know, because you want to know how many, basically, you know, what are in them. That's the bottom line. But that's what you want to know. But you know,
okay, you have trained me well enough. I can do that. Thank you.
You're too funny. Okay, man. Hey, enjoy that weather, Frank. It's coming at you. You're going to love it.
Oh, we are. Thanks.
Okay, man.
See you later.
Have a great one. Have a safe one. So they're running this right to the close, that's for sure, folks. And then if we look at the volume, what we have out here, you're going to have volume, too. Right now, you see that number there? We're already at 818 million in NYSE. That's really unusual, really unusual. Inside the composite is going to be a monster, man, because the composite, well, we had 4.6. So the composite is going to be banging out about 5.6. And if we go take a look at this composite, yeah, this composite's interesting, man, because you can almost make the case. This is going to be wild watching this thing shake out. Yeah, you can make the case that, the composite wants to go to its highs from like 3 weeks ago. If that's what we get, this is, you got to love how deviant the market is, man. I mean, it's just amazing. And, when you take a look at the S&P, the S&P is a total different setup. And that does happen, folks, in markets because what you have in this particular case, right? Picture in this particular case, there's so many folks that, when interest rates are going up, they wanted banks. Well, now, bottom line, folks realize that, oh, no, and this is where, so watch this. This is where things change on a continual basis, even on a fundamental basis. And in this particular case, people were going into banks because they thought that they were working on the spread, okay? The spread between what they give us when we deposit money in versus what they lend out. Well, what has happened in the last 15, 20 years is that there are so many other institutions now that you can still get CDs from that are paying much more than the banks. So the deposit base has been going down on the banks. And of course, they're never used to a deposit base going down. They've always been used to the deposit base going up. There's a number out there that I believe this is the first time the deposit base went down, like going back 50 years. Like it's some insane number. So my point is that a lot of these folks that own banks right now, well, the way the tech stocks are running today, they're saying, hey, man, I'm getting out of these banks and I'm going to go into growth again, because they did. It's not that growth held up. I mean, Amazon held up for sure. That's for sure. Microsoft, that was there. What did happen is if you do on Microsoft, folks, what happened this morning is that if you have Bing, I use Bing as my front page just because I love the pictures. I've always loved the pictures. So when I wake up in the morning, oh, look at that. Don't. Okay. We just lost internet, but that's all right. When you wake up in the morning, and I like the pictures, well, this morning when we woke up, they had it on the front page of Bing that the reality is that, they're putting Bing inside of the Office software. And that's what they were explaining. And are we still up, Al? Am I still up?
Went down, but you can finish the show.
Yeah, good. Okay. So bottom line is that, we got a little booted off again, and let's hope this is not one of the big ones which have had the last couple days. So anyway, the chat GBT is going to be everywhere, and you're not even going to know it. That's the bottom line. Oh, and I got to tell you something about Twitter. Oh, my God, this is insane. So listen to this on Twitter. On Twitter, so, Musk buys Twitter, and he says about how many bots there are, right? Well, this is like crazy. I was talking to Jacob yesterday, and Jacob is telling us that we have 77,000 followers on Twitter, right? And I'm saying, there's no way we have 77,000 followers on Twitter. It's just, there's not, I've just never done enough work on Twitter for that to fly, folks, okay? And I was thinking about it over the night. I says, can you imagine, it's great for advertising, right? I wouldn't sell it like that, but the reality is you get the gist of it. Twitter, I think there's machines talking to machines, man. And then there are some people on it. But I think they'd be really in shock about how many, basically, machines in general, okay, are just talking to machines. Stay right there. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrials up 345, Nasdaq's up 273, S&Ps are up 67. Bottom line is that, our whole internet did go down, folks, but thank God for cell phones, right? I mean, I can do everything on this phone. So, we went through these volumes earlier. You're going to have volume inside of the NASDAQ, not inside of the S&P, so you're going to have divergence out there. That being said, you're coming into a Friday, so I expect what you're going to see. This run will go further, coming into a Friday. And it's just deviant enough, meaning that you have a week like this, and one of the Tigers was saying earlier is the fact of the matter that can you believe that at the end of the week we're actually going to be up? But that's how markets work, folks. That's the reality. So we'll see where the what did happen, and they made sure that was happening before the market was closed. You had the confirmation that those banks did put the money, are putting the money. Looks like the documents must be signed, and they're putting those deposits in. We'll see. I guess that's just a confidence builder that they're all putting deposits in, and see where the rest of this goes. Because, as I said a little bit earlier, they're in the hole, and they're in the hole by $26.9 billion, and the equity was $17.6 billion. And I'm not quite sure whether the $17.6 billion was the aspect of my woman it was. Yeah. Anyway, you get it's a minus $10 billion. That's the reality, and they were funneling in $30 billion. So that gets the whole. It doesn't get the whole made, by the way. Okay, but what it does is that it'll bring regulation-wise. When people look at it, it says, okay, you can see. I think what they're doing. Oh, I see what they're doing now. What they're doing, they're covering the $26.9 billion. That's what they're doing. They're putting $30 billion. They're covering the $26.9 billion. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Go get him, folks.
Building wealth